We're snorting cap rates and shooting up cash flow here at Deal Junkies. Welcome back to Deal Junkies. We've got a very special episode for you today. We've got Wanot in the studio. Mike Nuss is here with us. Trevor Howard. I'm Gabe Johansson. Jan, before the show, you talked about changing your last name. So we got to know if you're
Let's dig in.
Jan was born and raised in Poland until you were 7 years old.
Correct.
But you want to, so your last name is Wanot. It's kind of like saying, like, why not? Why not change your last name?
Why not?
Why not?
It's set up to change. Yeah, I would say it's already been bastardized. You know, my last name's already changed a lot. So my grandpa fought for the Nazis actually in Germany, and his last name was Wanot. And then he moved to Poland to marry my grandma, and then they said, you can't have that last name here.
Got to change it after that.
Change it to Wanot.
So in Polish, it's Wanot. And then I moved to America, and now they're like, what the hell is this? Why not? What not? What's hot? So
okay, so what have you picked any names that you like?
You know,
might change to?
I like Casa. So maybe Casa.
Oh,
it means house in
house.
Polish, and it means cash in. Oh, sorry, it means house in Spanish and cash in Polish, which is kind of fun.
So Jan Casa.
Maybe.
Like
I have a few.
It's better than Smith.
It's got a ring to it.
I got a few top contenders. We'll see.
All right. Jan is a real estate investor. I'll probably mess this up so Trevor can help me out here a little bit. Jan owns several mobile home parks. We call it MHP.
Yep.
You do flips.
Yep.
You run the largest meetup in Seattle, real estate meetup, WAREI.
Correct. Yep.
Is that WAREI?
That's it. Yeah, we've got about 20,000 members in a Facebook group. We do 2 monthly events, and then I do a master class, and this year for the first time in a few weeks, a mastermind. So a variety of networking and educational opportunities for people.
So if somebody wanted to connect with you and all the things you're doing, what's the easiest way for them to find you?
Easiest way
His
is
phone number is
easiest way is probably Facebook. Find the Facebook group, or just find me on Facebook. Jan.
The WAREI.
That's it.
Facebook page. Go find Jan. Okay, so we're excited to have you on the show. I'm sure I missed a couple of things, but Jan is a very successful. You're 34.
Yeah,
34-year-old investor, born in Poland, came to America at a young age, learned to speak English, and now is living really the American dream. I mean, you're.
just want my little slice of it, you know? We all just want a slice of the American dream.
Okay, so you got to take us back a little bit in time. We got to take a trip back to figure out what makes Jan tick.
Sure.
So was real estate always something on your mind, or give us a backstory of kind of maybe just start off from Poland and coming to America and where real estate enters the picture for you?
Sure. Sounds great. Yeah, born in Poland. I lived there till I was 7, so got to kind of get accustomed to one place, and then just kind of overnight ripped out of that environment that I was comfortable in and moved to America because my dad was doing international trade and had businesses in America, and, you know, got to be grateful that I kind of got my hustle and my sense of business from him. He never really stuck to one thing. It was always just like a new side gig, right? And so that's kind of where I just generally got that energy. And so at age 10, I remember, you know, buying giant jawbreakers at Winco for 15 cents and bringing them to school in my backpack and selling them for $1. And, you know, I just wish I could replicate those kind of returns now in real estate, because that was amazing. But I can't. And and just kind of went from there, you know, just was always interested in like arbitrage and providing value and bringing something to a market that maybe wasn't there. So in high school, kind of just got through things, made it to college, figured I'd do a business major, and did an applied computing minor. And then I didn't have a specific draw to any specific business, so I just figured, okay, I'll just get a corporate job. Went and worked at Boeing in aircraft sales and commercial contracts. And then after 4 years of that, I was kind of like, man, I'm making $60,000 a year. I'm saving $20,000 a year, right? I'm living on 40. And how long until I have $1 million at this savings rate.
You're going to die at that job.
50 years.
You won't ever get it.
So I was like, this isn't going to work for me.
It seems like you'd make a lot more money in selling airplanes than $60,000 a year. What am I missing here?
There's no.
Isn't an airplane like a couple $100 million or something?
They're generally from $40 to $140 million for a single airplane, but we don't get a commission.
Okay.
But if we got even 0.1%, I wouldn't be here sitting with you. I'd be selling airplanes still.
What motivates you to sell something with salary and no commission? Like you're just trying to get the experience?
People, I would say it was the coolest job available at Boeing, but it is an old school company. And so when you're just coming into as a lowly new kind of sales support or contracts admin, you're just supporting, you're just a small cog in this giant wheel. And so I felt like I didn't have the parts of a job that make a job great, which one of them is, mastery. Like I was kind of just doing the same stuff over and over. So I wasn't getting to learn a bunch of cool new things. I certainly didn't have a lot of autonomy, right? I was just kind of like, hey, this is your task. Mm-hmm. And I found out pretty quickly, I don't like doing things that other people want me to do. I like doing what I want to do.
Well, you were an entrepreneur from a young age.
Yeah,
going out and selling Jawbreakers. We hear a similar theme with almost every guest we've had on the show, where they were selling stuff in school to their friends. It's a pretty common theme. I think I don't know. I guess you could become an entrepreneur, but you were born an entrepreneur. You had the immigrant mindset, that hustle that I think that a lot of Americans lack.
Yeah,
I see a lot of people that come from other countries that do very well. They just have a different work ethic, I would say.
Yeah.
My dad came from Norway. I wasn't born in Norway, but my dad came to the U.S. when he was a kid, and so I was raised in a very similar kind of. My dad had shiny object syndrome a little bit, but it never succeeded to the level I thought that he could have, but taught me the work ethic,
right.
And I think that that's a very valuable thing to have. So
for sure.
Okay, so you're an entrepreneur, you're selling airplanes, $140 million airplane, you get nothing. They give you a pat on the back.
Correct.
You get to go to a Christmas party or something cool, be part of. They give you a mug or something that says Boeing on it.
Yeah.
But you're not like a commissioned salesperson. But you must have learned some skills in that job that help you today still.
For sure. I would say the biggest skills I learned from Boeing, right? I think the biggest thing you can take away from a giant company is how process-oriented the company is. And so now I realize in my company, right, that I need processes for any task that's repeatable, which is pretty much any task is repeatable, right? Very few like completely unique tasks. And so I think that's what defines a company, is how the strength of its processes. And so even if it's just a simple checklist in an Excel spreadsheet, even if you're starting with a 5-step process, I think that's kind of what I learned is, okay, I need to be able to in order to scale, I need to start creating repeatable processes. And I learned that from Boeing for sure.
Yeah, you can't get any bigger if you're trying to do learn how to do the same thing over and over in different ways. It's almost like reinventing the wheel every day.
Right.
You have a process in place, and now you can scale, rinse, and repeat, hand that off to AI or a VA or an employee or somebody else so that it doesn't take up your
business
time.
is an organization, and an organization isn't organized without processes and structures.
Systems and procedures.
Yeah.
Mm-hmm.
Yes. I want to know about your self-worth. Like when you got that job at Boeing at first, like $60K, just an amazing salary, and then over a 4-year period of time, you just realized that you had more worth than that? Or like, what was your mindset getting into that job? I think the word golden handcuffs has come up with like 4 or 5 conversations over the past couple of weeks with me. And I think a lot of people do that. They get into a job, they paid well, they have a golden handcuffs, and then they stop valuing themselves going forward. Kind of what I heard was someone who said, hey, I got a good job, I was happy, it just wasn't worth what I'm worth.
That's definitely a part of it. Yeah, I think eventually as you're in an organization, you also start to see, what is my path here? What could my path be? And in a best case scenario, like you grind, 10, 12 hours a day, and you get a significant promotion every 2 to 5 years. And then you become like a VP and you make like maybe $1 million a year after 30 years. And I'm like, I could do that faster. I know I could do that faster. So that was part of it. Another part of it is I saw people that, their families were in aviation or they were a pilot, and I saw the passion in their eyes, when they would do the work, and I didn't have that. So it was multifaceted. For sure, part of it's money, part of it's just like I don't have an emotional tie to an airplane. I just got a cool job that was available to me after school, because that's kind of what you do. And everyone around me is like, wow, good job. You got like a great corporate job. And I felt that way for a while, but that always subsides, and then you start to look at the reality of where you are. And so those are kind of the two reasons I shifted. And so as soon as I realized that, I took action, right? So I would go do my Boeing job, and then I would figure out I would do my 9 to 5, and then 5 to 9, I'd be like, okay, how can I start a side business? So I tried to create like a new backpack product. It turned out, and I built a team, and I had like an industrial designer and an engineer, and there was going to be some electronic components, and turns out creating a new product from nothing is very difficult, especially when you're young and broke and don't have any connections in China.
So how'd you pay these dudes even? Because you were saving 20 grand a year. Did you just use your life savings to go try to produce this backpack? And
no, we met at a startup weekend. Like, our idea got second place, and then we were like, okay, this is actually cool. Like, let's keep working on it, right? So we put a real effort into that, and then it just kind of fizzled out. I tried another apparel company. I was like, okay, kind of t-shirts, that's easier. There's a process, and et cetera. But again, I didn't understand marketing and sales really at that point, so I was just limited there as well. And then I was like, okay, I need something like even more structured, even more repeatable, something also with bigger sums of money. Like, I'm not making anything on these $50, $100 products. So that's when I figured, okay, let me try renovating a house and renting it out. That I can build equity, I can start getting some cash flow. So it took me about 6 months of just going to meetups and asking people like, okay, what do you do? What do you do? What works for you? And then I figured, okay, I'll do a house hack for my first one that seemed to be most achievable. But for a while, people were like, well, what do you want to do? I'm like, I don't know, just send me everything. And guess what? Nobody sent me nothing at all, because no one thinks of you if you're just open to everything. But if you tell me, hey, I buy 18 to 36 unit multifamily in Salem, and I do big value add, then maybe I'll probably call you when I find that, right? Because I know you want that. Mm-hmm. And so that's finally when I just realized, okay, I really need crystal clear criteria. And so the criteria equation for me was like, okay, what's the asset class? That was single family or small multifamily. What's the location? Okay, Central Tacoma. I went to UW Tacoma for a few years, and I went to UW Seattle after that. So I was like, okay, I know this area, so I want it in Central Tacoma. What's the price range? Okay, up to $500K. That's my budget. What's the value add? Up to $50K rehab. And what's the exit strategy? Well, I want a long-term cash flowing rental that makes $500 a month. So, and then when someone asked me, what do you want? I said, I want single or small multifamily in Central Tacoma, under 500 grand, under 50K rehab, that cash flows $500 a month. And eventually people are like, okay, you're serious about that. You keep repeating it. You sound like a broken record. And eventually, that's how I found my deals. My first one I found on Craigslist. My second one, a broker brought to me. A third one, a wholesaler brought to me. But they were all identically within that criteria. And that's all I looked at. That's all I focused on. And I think it's really critical in the beginning that you're not open to everything. You really try to dial in what you're going to buy. What is the bucket that you're going to buy in? Because then people get to know you for that. And people will know, like, okay, this is what Mike wants, or this is what Gabe wants, this is what Trevor wants. And they'll start sending you and start thinking of you for that. So that's how I got my first 10 units within the first 12 months, is just by really dialing in on this is what I'm buying.
So you said that you house hacked. So to house hack, you're living there.
Yeah.
So you moved into each one of these 10 units?
I moved into the first one, right? And then the second one, I'm like, well, okay. So I started, by the way, with $23,000 in savings from Boeing. And I was like, all right, I have a dream and 23 grand. Let's see how many houses I can buy with this. Right. So the first one, I only put in 9 grand, which was great because it was a
3%.
owner occupied. Yeah. 5% down, owner occupied loan. I split it with my brother. And then I'm like, okay, I got like 15 grand left. Let's buy a bunch more houses. And then, so the next one I was like, okay, I found a fourplex. A broker brought me a fourplex, and I was like, okay, Ludic, we just did this first one. I found another good deal. I'll manage it. I found it. I'm going to rehab it. I just need you to sign on the loan, and then you need to move in after I'm done fixing it, right? And so that's how we got another 3.5% down, fourplex, FHA. This was probably around here. You can still get FHA fourplexes at 3.5% down. In Seattle, we're now priced out of that option because of a couple restrictions on the debt. But that's how I got the fourplex. And so he moved in at the end of that. And then I'm like, okay, we're pretty much out of money now. And now both of us have used our owner-occupied loan. I'm like, wait, I have a girlfriend. So then I found a duplex, and I'm like, babe, you need to sign on these loans. She's like, what is this? I'm like, don't worry about it. Just sign the paperwork. Okay.
They're still friends if anyone's worried.
We're actually, yeah, she's made me sell that since I was an ex-girlfriend. But I was like, just sign on I was like, by the way, can your parents lend me like $14,000
and take on this debt?
And so that's how we got the duplex. All right, that's 7
So her
units.
parents actually lent you $14,000 for it?
Yeah, but I paid them back quickly.
Yeah.
Okay. But also, like, I think, or maybe anyways. Then the next one was a triplex that was brought to me by a wholesaler. And same thing. It was like, people knew what I was buying. I had my crystal clear criteria. And he brought it to me, and I was like, man, I don't know. Who else do I have here? I was like, hey, Mom. Hey, Mom, can you sign on this loan? She's like, what is this? I'm like, don't worry, just sign the paperwork. So fixed up the triplex. She moved in. And, basically just put all my friends and family into multifamilies and that I owned a majority percentage of because I did all the work. And they shared in the risk. But at the end of it, they just got renovated units to move into. And I helped, start building wealth and cash flow for them and, of course, for myself. So that's how I bought my first 10 units, just with a will and a dream and just, why, not how. Because
Are you still working your day job while you're buying these units, or had you already left Boeing at that point?
I bought my first house and I rented it for $1,650. My mortgage is $1,150, and I get I get $500 in my account. And of course, not even thinking about vacancy, capex reserves, maintenance reserves, anything. I'm just like, I just made $500. Fuck Boeing! I left immediately. Yeah, so.
Dude, I absolutely love this. I want to kind of weave a thread through here. I have a theory. I think people are afraid to focus. And I think they're afraid to focus because they're afraid to master something. And in order to focus on something and master, you have to give up a ton of potential in life. Because think of it as we're kids. We can literally do anything we want. The potential is as full as it gets. When we start getting good at something is when we start saying we're not going to do any of these other things. And what you did is you said, the other word you used was mastery. So when you started talking about Boeing, you started talking about the elements of a happy job, and you immediately went to mastery. That was the first word. And so then you get into, okay, I'm getting into real estate, and then you focus on your buy box. And so innately what you're doing is you're saying, I'm removing all these potentialities in my life. And then the byproduct of that is removing distractions and getting clearly focused so you can do two things. One, master it. But two, before you master, just communicate adequately in order to get traction and success in that. I love it, man, because it sounds like you just purely did that based on, this is just where I'm going to go. I'm going to go figure it out.
Yeah, 10 units off $24,000 in 1 year is so sick.
As soon as the first one worked, I was like, okay, I know I can. Like, the first one's the hardest, right?
Yeah.
So as soon as you get one done, you're like, I know I can do that again. I just need a little help or creativity. And so, yeah, you just need proof of concept. So if you don't have your first house, do absolutely everything you can to make that first one pencil, because then it's easier and easier. Right?
Yeah. So that was like a $2 million portfolio or so in 1 year.
Yeah.
So you said
in a market that you can't buy.
You're working in corporate America. You realize you want to make $1 million. My question is, before you got to your buy box in real estate, how did you decide that real estate was going to be the fastest way for you to make $1 million?
Well,
was that instinct, or did somebody tell you that?
I went to enough meetups and I just met enough real estate millionaires, and I was like, God, damn, there's a lot of these guys and gals. Like, I would go to startup weekend and then try to meet people that had some success in something, and they were all just like struggling. But then I went to a real estate meetup, and then like every other person was a real estate millionaire. I was like, okay, this is a lot more repeatable for some reason. So like, let me take a shot at that. And starting a new product from nothing is very complex, and unless you have a team and you have mentors, and I just didn't have that. Like, if I met a bunch of people that created new products, then I probably would have had more success in that, But I just had a lot more examples. As soon as I became interested in it, surrounded myself with those people, and I was like, man, there's a lot of these. If they can do it, why not me?
Sure. The community.
Yeah.
Where'd you go to next after those 10 units then?
After those 10 units, what I should have done is continue doing that. But what I did do is I got a little bit of shiny object syndrome, and I thought I could just do. I think at that point I was also just completely tapped on cash. So I also took a personal loan, and I also drew against my 401k to like make those 10 happen. Okay, because at the end I just started running out of money, and then I'm like, okay, I need more cash, and also I want to take advantage of this opportunity. So in Seattle, in any major metro, there will be a like rezoning every 10, 15, 20 years. And so what was happening in Seattle, they announced, hey, we're going to rezone a lot of this single family to multifamily. So I thought, hey, I have a friend that already wholesales development sites to folks. He's already got the basics of that. I've done some off-market marketing. Why don't we team up and we'll buy a bunch of single family homes that they say are going to be rezoned to multifamily. So then we would only buy them if we thought we could make $200,000 a pop. And so we were like, okay, then we got 6 of them. We were like, we're going to make it $1.2 million this year. And that's where, the risk happens in investing. It's not all up and to the right, because when it came to the final proposal, when they actually made the zoning change happen after we had got 6 of these properties, only half of them actually got rezoned to multifamily. So we just overpaid on 3, and we did make money on 3. But overall, we worked really fucking hard for like $60,000 in 18 months. It's like, damn it.
Dude, we saw a lot of that in Portland, because in 2013 they started the 2035 comprehensive plan, so they had 2 years to do it. And
Okay.
I was doing a lot of coaching at that time because of our brokerage, and I remember my statement was, get in front of the government, but don't bank on the government. There's so many people that were buying these properties based on this code change, and even in at this point, 2018, we're 5 years in, 3 years past the deadline, and people are still, the city's going to do this. The city's Yeah, they could, but what if they don't? And are you using the lens of what if they don't? And so you definitely want to get in front of the government. That is absolutely true. Show me a city where if you get in front of the government spending, you don't do well. It just doesn't exist. But you don't bank on it.
Correct. Yeah.
So how'd you fund these things? Because you have no money at this point, and then you just go buy 6 houses. Like, how'd you do it?
Yeah, so a lot of them, well, in many cases, we were just able to negotiate developer terms, right, and get long closings. So that's why we didn't get completely crushed. Like, we didn't close on all 6 of them. Some of them we just had in 12, 18-month due diligence periods, right, which was great. But, I mean, that's how you quick recipe to lose your earnest money if it doesn't pan out, right? So we made, like, even though we didn't close on all of them, we closed on some. It's like still we're able to mitigate some of that risk by just having developer terms and waiting until we saw what actually happened before we closed. So
are you doing hard money loans on it, like 100% financed, or like how'd you close the ones you did without?
Conventional financing for the ones that were, yeah. At that point, I had enough success, I think, even though I had only bought 5 or 6 deals. Like, I had done enough of a similar thing over and over that I could point back and be like, hey, this is why I'm asking you for, $75,000 or $150,000 to input into this deal and be my equity partner.
I see.
Yeah. And so I've done a lot of that, just helping my friends and colleagues and people from the Wari community get into real estate and be, co-owners with me by helping produce the debt, right? Because I didn't have a job anymore, right?
Yeah.
And I just bought rentals. I mean, like, I didn't have a lot of income either. My first year in real estate on my tax return, it says $18,000. So I took a big downgrade in income, even though I had built a portfolio that was worth probably at that point, almost $2 million. Banks they didn't care.
So what's the proper way to quit your job? Like, from a banking standpoint, what's the proper way? When is the right time to?
They don't ever want you to quit your job.
Yeah, but you can set it up the right way, right? So you get 2 years of tax returns of the type of income that you are eventually going to, so then the bank sees that. Like, there's got to be a game plan here.
If you're if you're in the same industry and you quit your job and start your own business, you only need 1 year and you can get into it easier. But I mean, the way he did it was great. You just buy one and then quit your job, so you got into your one you have to live in for a year.
Would
and
you
then
say
use
it
other
was
people's
great?
Loans.
Yeah, definitely.
Okay. All right.
I was happier.
You just didn't qualify for any loan.
Yeah, for
You just
years.
made your strategy.
For years, I didn't qualify for loans because people always say, people always give the guidance, oh, if you don't have any capital, you should start wholesaling because it's low capital and needed. And that's how you're going to start getting income. And then maybe you do some flips and then you do rentals. But I knew my goal was always long-term passive income and equity growth over time. And so I was like, well, why don't I just start with the end in mind? So I just started buying rentals. I didn't care what people said about wholesaling. I was like, I don't want to do that. I want to start buying rentals. If that's my end goal, why don't I start now? And I'm glad I did because my first house I bought for $130,000. The house is worth $500,000 now. That was in end of 2016. It's like 7 years ago and it's already tripled. So it's like, yeah, I'm totally glad I didn't just wholesale everything.
Yeah, you would have made 10 grand.
Exactly.
When you got shiny object syndrome, was it because you saw that you can make some quick cash? Was it the allure of actually over here I've sort of built a portfolio, I have some equity, but I'm living on less money and I need more money in my bank account? Would you say that? Or was it just more like, oh, I want to go try this new thing because I think it's cool?
I wanted to learn about development because some of my mentors were making big money in development, and since I have as well, and so I don't regret doing it necessarily. Part of why I love real estate investment because it's so varied and so broad and so diverse. You can just keep learning new things. It's awesome. But I will say, even though I've gotten good at a lot of different asset classes and a lot of different investment strategies, my friends that are most successful, my mentors that are most successful, they've really honed in on typically one, right? Just they're really good at buying and operating one asset class. So I do think I've missed out. And I think that's part of a natural journey of investing. You're just trying to scrap together anything that makes money. But if you don't just keep executing on one thing, even though it's becoming a little bit boring, I think you do miss out on like the specialization that this country really rewards, right? LeBron James gets paid $50 million a year because he's the best at putting that ball through the hoop, right? Like there's no one else that does it as well as him. So it's like this country really rewards specialists. And so if your dream is to get to $100 million net worth, $1 billion net worth, you don't want to be good at everything. You don't want to be trying everything. You just have to pick something and become incredibly good at that. I don't have any illusions about getting to $1 billion net worth, so it's okay for me. But you have to think about what's your end goal and what am I going to specialize in to get to that end goal, because you can't give up those years to just trying stuff if you do have really big dreams, I think.
So you've shifted, though. Your buy box has changed because now you're a park guy.
Correct, yeah.
So somewhere along the way, do you still do multifamily, or you just solely, is your specialty parks?
Yeah, and here's why I'm not going to ever become a billionaire is because now I still do some residential, some education and events, and now some commercial. Right, it's still kind of a problem per se. I feel fine. It's not a problem, but if I wanted to get to $1 billion, it would be a problem, right? So
you'd have to pick one, is what?
Yeah, for sure, I think so. Again, my most successful colleagues and friends, like they're just really good at one thing, I would say.
So why the shift from multifamily to parks?
I would say I shifted into parks because I thought, I was managing a portfolio of about 20 units at the time. And I was doing it all myself, right? Not with property managers. And I had 3 washing machines break in like a week. And I was just like running around trying to fix these washing machines. And I was so sick of it. I was like, how can I keep doing this cash flow thing, passive income thing, but have less things break and have less operational input? And also I was really concerned about a recession around 2019, 2020. Of course, we had the biggest bull run ever after that. So quite the opposite. But I was like, man, in America, we have a recession about every 10 years. And we did for many decades. And then this is like the weirdest 2 decades ever, right? And so we're still on the longest bull run in American history. But for those 2 reasons, less operational input while still cash flowing, and also to hedge against a potential recession, I got into mobile home parks because for those 2 reasons. And so bought my first park in 2020, 26 units, and seller financed the first one. And now we own and operate 7 parks. They're all small to mid-size, but we're targeting some bigger ones, and we're getting really close on some big ones this year. So been doing mobile home parks now and love that asset class a lot.
So parks have less operational input, the way you put it. So it's there's less things to break. You're renting out basically a parking space with utilities.
Correct. Yeah. The main value you're providing is land, utilities, and community management. Those are the 3 primary, I would say, pillars. You're not providing a toilet and a nice floor and an aesthetic kitchen and working blinds. It's really nice because I haven't had to repaint a unit in a long time. I haven't had to, deal with someone. One time, one of my good friends got a maintenance request in like his property management software, and this gal just straight out of college uploaded a photo of some the tangled cord on her blinds and was like, I can't, you have to come over and fix this. And he's like, just try. And then 20 minutes later, she's like, okay, I fixed it. So I don't have to deal with that anymore, which is nice. Don't get me wrong. Mobile home parks have their own set of problems, but I will say operationally, it's much easier because now I have for example, a 43 unit in Moses Lake, and I can actually afford to hire a full-time park manager. And all she does is hang out at that park and resolve tenant disputes, get the maintenance guy over there, help us do CapEx, expand the park, manage the community, deal with problems. Like now we're at a point where she can do all of that. And as long as my utilities in the ground are good, which is the main thing you really want to check for during due diligence, obviously financials and zoning and all of that. But in terms of systems, you got to make sure you have clean, good operational utilities. And if that's good, I mean, how often, if you put in a new sewer line, how long does that last?
How do you do due diligence on underground utilities? Like you're talking about bringing the water comes in, the wastewater goes out, electricity comes in, cable comes in.
Yeah.
I mean, it's basic stuff.
Basic stuff, for sure. But
so you make sure your sewer line isn't broken.
Correct.
You do a scope.
Correct.
How do you check? How do you check the other utilities like your power and?
Yeah, we'll look at every single unit with an electrician, and we just go, look, here's the electrical pedestal. How does the service drop look? From the power line down to this grouping of pedestals. What do the breakers look like? What amperage is this pedestal? Is it in proper conduit? Is it all to code? Do you recommend any modifications? Is it safe? And we take notes on every single one. It's very arduous, right, to do that 50 times in a row. But then we can actually have a clear plan of, hey, here's what we have to do now for safety and habitability. Here's what we want to do in the next year. Here's what we want to do before we sell our refi, before a revenue event. So, yeah, we just look at each utility, and if that's looking pretty good, then that's definitely one of the big parts of making sure you're buying an asset that isn't going to surprise you.
So you like the management of it. How about the cash flow? Is it cash flow better than multifamily for you?
For sure. So here as a reference point for those listening, like let's talk about what does a fourplex cost here in Salem? Where
$800.
$800,000. Okay, great. How much does it bring in rent on average?
$6,000
a unit. Yeah, $6,000.
$6,000. So 80%, right?
Mm-hmm.
About 80% rule.
Yeah.
Okay. With like a park, okay, my second park I bought for $600,000, so close to a fourplex, let's say, maybe more like a triplex, and it brought in like the year I bought it brought in $12,000 a month, right? So like 2x the
income.
Yeah, 2x the it's a 2% rule property, right? So if you can get a 1% rule, if you can get a fourplex in Salem for $800,000 that brings in $8,000 a month, you're winning, right?
Mm-hmm.
Well, in mobile home parks, I have multiple parks that are 2% or 3% now. So that park now that I bought for 600 brings in 19 grand a month. It's like 3% rule. So it's just a totally different ball game.
You're looking at a gross rent multiplier. You're not buying on cap rates. You're buying on your income multiplier.
We look at a variety of profit metrics. We definitely look at a stabilized cash on cash. We want that to be above 20%, right? So after we do our value add and raise rents, we want to be above 20%. I mean, if you're going to be below that, if you're going to be at 10%, I mean, you might as well just put money in the stock market. So we want to be at 20% plus. We also want to make $500,000 on a deal if we're going to do it, right? Over 5 years. Otherwise it's probably too small, right? I mean, I've employees and team members and capital partners, so there's got to be some meat on the bone. And it has to make sense from a kind of a brain damage to input perspective. Like, I'm willing to incur brain damage if it's a super juicy deal, but we also love deals that are like pretty much good to go. They just need like cleanup. They need 20 grand in utility work. They need way better management structure. They actually need rules enforced. We love that because it's simple and it's going to cash flow from day one, and the cash flow is just going to get better. So most of what I bought hasn't been super heavy value add. We just add the value by finding it under market, by talking to so many dang people that eventually, we find one that's really under market value.
Yeah, not every deal you're finding is a 2x or 3 or 2% or 3% rule. I mean, those are the deals you're buying, but
everyone now is a 2% rule.
So how many deals do you look at before you find one of those deals?
A lot. Yeah,
it's not every other deal.
You're creating that, right? So it's not a 2% when you buy it; it's a 2% based on
once we kind of
your total cost
stabilize.
Once we stabilize it, we clean it up. We kick out, the people dealing drugs. We kick out we evict people that aren't paying or that are causing harm. I mean, these are mobile home parks, right? So we've got we had a lady that was clearly like selling meth and doing meth in her trailer. We tried to get her out. We're like, we walked up to her, said, Brittany, we got little kids here. This is a family-oriented place. We can't have you doing this stuff here. They're bringing guys over that have machetes hanging off their hip, and I got little kids playing 20 feet away. I just can't have it. So we're like, Brittany, we're going to give you $700 to get out by tomorrow. We want you gone. She's like, you guys are out of your minds. Like, I'm a professional tenant. I'm taking you to court. You're never going to get me out of here. We're like, all right. Next day, we're like, Brittany, $1,300 and you're gone tomorrow. She's like, all right, I'm out. She had an amazing weekend, I'm sure. Yeah. She called us 3 weeks later. I've changed. Please let me come back. We're like, no, remember you signed the paper that says you'll never come back. We paid you your money. You got to go. So we do focus on, safety and habitability first. And again, like, we want these to be places that, there's people that live in our communities that are just trying to, like me, get a piece of the American dream. They're starting doing hard labor jobs. A park we own in George, all of our tenants are Mexican immigrants that work in the apple fields, apple orchards, right? And so these people are hardworking, they pay their rent, and when they come home, they deserve to have a peaceful community just like anyone else. So I totally, I feel for these folks, and I'm super happy. And we make an effort to try to get them also into better living conditions. Like these parks, these parks are not beautiful places, but they're cheap, right? And it's where you start if you're trying to get a start in this country sometimes. But we're really happy when, someone says, hey, we thank you for being our landlords. We've been able to save, 20 grand and we're buying our single family home not too far away. And that is, that's why we do it. We love to hear that stuff. So
in the instance where you're getting rid of a Brittany, don't they own their own home? Like, how do you, I've heard that it's really, difficult for them to move a home because it costs almost as much as what the home is worth.
Yeah.
Do you own the homes? Are they park owned homes, or do the tenants own their homes?
Well, it is a mix. So if the park is all park owned homes, I kind of stay away because it's just a lot of work to sell 50 homes or 100 homes. But if there's 10 or 20% of the homes are park owned, we'll still buy the park and we'll just slowly sell those homes back to tenants over time. So out of the couple hundred, units in my parks, I still own maybe 10, but I've sold off 15 over the last 3 years that I've owned them. So that's been going well. And in terms of getting people out, I mean, look, yeah, your mobile home is kind of a misnomer. They're not really mobile. Like, yeah, they're moved into the park, but after that, they almost never move. And so generally people, I mean, if they stop paying, like, we'll make every effort to not evict someone. I'm not doing this for fun. It doesn't give me any joy to evict someone. We'll first call, depending on the county, like we'll call, for example, in Grant County, rural resources, they'll start paying their rent. We'll call like missions and like churches, and sometimes they have some money to support these people. But if we've exhausted all the other options, we need to evict them. And typically what happens is they'll either sell us the home, and then we'll just resell it to someone and clean it up, or they just abandon it if it's in bad condition, and then we have to spend thousands to demo, $5,000 to demo it, $10,000 to demo it, and put something new in.
So to scrape a bad unit,
At
it's
least
about
$5,000.
$5,000 to $10,000.
Yeah.
Interesting.
Could you talk about your acquisition system a little bit when you're finding these deals?
Yeah, of course. Yeah, I'd love to. So, we primarily focus on cold calling and direct mail. We don't have a big marketing budget. I need to increase it currently, but currently we spend about $3,000 or $2,000 to $3,000 a month on marketing. Most of that's going to our Egyptian cold callers, and they have a script, and they just say, "Hi, are you still the owner of this mobile home park?" "Yes, I am." "Okay, great. We'd love to make you a cash offer. I'm just going to ask you a few questions, and this is going to take a few minutes of your time." And they just go into 15 questions about the park, confirming how many spaces, how much is pad rent, what kind of utilities are they, private or public, and then I have my 2 acquisitions guys that follow up with those leads, do a discovery call, do a price anchor, say, "Hey, based on what I'm seeing, how do you feel about this price?" They do a soft pass, right? And just get their feedback. Every of course, owner has a price that they would sell for. They never want to say it. But if you say, "Hey, this is what I think, just initially looking at it, what are your thoughts?" Then we know, then that gives us a temperature gauge. How good is the lead? Okay. It's a $2 million park and they want $3 million. All right, that's probably a cold lead. We need to talk to them every 6 months and just see if anything's changed. Or we need to maybe dive in a little further and see if there's value add that we're not seeing initially, right? So we do that discovery call and price anchor, and then we follow up and try to propose a cash offer and a seller financed offer. If they don't like those, sometimes we'll get creative if we really want the deal. Maybe we'll do a novation style or a lease option. But for the most part, it's just cold calling to acquisitions manager, to analysis, to follow up, and then get the deal signed around. And I generally, my position is just, or my role in the company is just underwriting and then kind of deal structure. So,
are your acquisition guys in Egypt too?
No, they're in Washington.
Okay.
Yeah, they're Americans. So it's fine to do an initial cold call, I think, with someone out of country. But it's a little bit harder for some of these folks are, whether you like it or not, a lot of these mobile home park owners are just like old mom and pop. And they're not gonna spend more than 5 minutes with our cold caller,
I hear a lot about VAs in Southeast Asia. I haven't heard Egypt before. How'd you land on Egypt?
We've tried a lot of VAs, Pakistan, Southeast Asia, Philippines, Egypt, South America, Costa Rica. And Egypt seems to be the best mix of strong accent, pretty sharp people, and also price. So we pay, about $6 an hour, which is a solid rate over there for our cold callers. And they drum up typically about 10 to 15 leads a week, which we're happy with. So,
and out of those leads, we were talking about this in conversion. So you're writing an offer on anything that's a hot lead. You're writing a B. Here's a cash offer, seller carry offer.
Yeah.
And so it sounds like a lot of leads to deal with. But it sounds to me like based on your buy box, you have to go through lots of these before you land on an actual deal. Does that take you close a deal every month, every quarter? What's the goal there?
Yeah, we make I would say 5 to 10 offers per week. So we don't offer on everything that the cold callers drum up, but about half of it. And out of those offers, we generally right now are getting about 1 contract a month.
Okay.
And then whether we actually, closing is a whole nother story, because sometimes a seller will tell you a really beautiful rosy picture, and then you get there and it's a nightmare. And so, but yeah, that's kind of like from lead to contract it takes about, I would say, anywhere between 20 and 40 leads to get 1 contract. And these are people that already meet our criteria. So we're willing to buy something out of state that's at least 40 pads or greater, doesn't have a wastewater treatment plant or a lagoon. Those are just too big of a headache to deal with, unless there's a clear plan to get onto city utilities. And again, it needs to have a stabilized cash on cash above 20%, and we need to make at least $500,000 within 5 years on the deal. So everything that I'm offering on kind of already meets those criteria, but a lot of it is just, we're just far apart, seller and buyer. That's it.
Are you getting P&Ls from these sellers on the initial calls, or
no?
So you're just verbally getting some basic info on what they can
On
do,
rents. They know rents.
and then you're making an offer based on all the verbal info?
Yeah.
Okay.
What are your biggest metrics you look at? Are you looking at like price per pad or anything like that? Do you have
Definitely.
anything?
Yeah, price per pad's important. Look, if you're buying on the West Coast, I would say a lot of our parks are lower quality parks, like C class, maybe even bordering on D, some of them. But we try to bring them to like a B minus, right? But so we're happy to buy like C class parks, and for those, we've bought them around, all of them around 25 to 40,000 per space. So you got a 50 space park, at $30K a pad is what we paid for a 50 unit, and that was 1.5.
Mm-hmm.
One of our better ones. Now that's for, again, lower quality parks. You want like a nicer park with, all consistent, all manufactured homes, no RVs, maybe paved roads, a little bit of landscaping, like a B class park. That's going to run you, 50 to 70K a space. And then the really nice parks, like all double wides near the I-5 corridor, maybe, right? Or near some large freeway, curb and gutter, long-term tenants, everything. It looks like a subdivision almost. Doesn't even look like a trailer park. Those are going to be 100,000 a pad on the West Coast. Again, in a strong metro, right? I'm not talking about like some podunk town, which these parks don't exist in podunk towns. They're generally in strong metros, and they just look like a subdivision. We haven't bought one of those yet. That's kind of the goal, right?
Would that be A class? Is that what you'd call?
Yeah, for sure.
So how do you take a D to a B? Do you have to pave the roads and bring in curbs and gutters and other infrastructure?
Yeah, definitely. Paving we would pave before a sale or refinance to really bring up the value. You got to demo the worst homes and just start replacing the worst with the best now, and that really raises the level. If you add in some fencing, right? If you put up new signage, street lights, enforce community rules, right? If there's trash everywhere, it's not going to look.
Bring in management, good management.
Exactly.
Yeah.
And is that where you start then, management from the low-hanging fruit standpoint is just like, hey, start establishing some rules, show people that there is a backbone here, that things are going to change, and then once that process is started, then start spending money? Or do you start spending money and then enforcing rules?
We do both. I mean, we definitely do both. It's critical, I think, that people see that you actually care and start making improvements right away.
Yeah.
So we'll have our manager go to each tenant and say, what problems are you experiencing? Because if people feel heard, that's the first step. That's where the connection starts, right? So I used to do it. I used to walk to every tenant and write down what problems do you have with the community? Who's causing an issue, or what, you got a water leak? What's going on? Tell me. We'll fix it as soon as possible. So that's the first step, is actually hear people. They know, they've been there longer than you, right? So trust that. And then, we just start spending money on value add. Again, safety and habitability first. So if there's water leaks, sewer leaks, we buy stuff with active sewer leaks. I mean, it's pretty disgusting. So if you can fix that right away, get rid of a smell, people are like, man, that's already better. It's only been 2 weeks and I already feel better here.
Mm-hmm.
And for not large sums of money, you can start gaining trust. And then, we start being real consistent with, here's a late notice every month on the 7th. If we haven't received your rent by the 5th, you're paying this late notice. And then as soon as, we have someone that's not liking rules, they've never had to live with rules, and then we process an eviction, then people really start to take you seriously, right? So it's definitely a combination.
Mm-hmm.
What do those $20,000 to $40,000 spaces, what do they typically rent for?
My lowest pad rent across the portfolio is in a small market in north of Spokane, hour and a half north of Spokane. I'm down at $370, and my highest space rents are like $550, so somewhere between that. These are like secondary and tertiary markets. I don't own anything in kind of primary markets. I don't have anything near Seattle or anything like that. There's almost nothing near Seattle.
Yeah. I was curious too, when you're looking at, because that's a lot of leads you're going through and looking at.
Yeah.
Is that they're not deals because it's not a serious seller, or they just have their price they don't have to sell, so you can't turn it to a deal?
More so the latter. Yeah. A lot of them, they don't have a motivation, right? Most people we buy, it's not like single family where there actually is fire sales. There's people in foreclosure, divorced. They had a debt. It's not like that. Yeah, it's just not like that. And commercial real estate owners are business owners. So that's a nice thing too. I'll tell you, if you've been calling single family and then you start calling commercial, they know why you're calling, Some of them, they're not excited to talk to you, but they'll hear an offer, Yeah. What are they going to do? Say no?
Money's money.
Yeah, but a single-family homeowner, they're like, I live here. What do you want from me? Like, no, what do you want? Commercial business owner, they know why you're calling. So it is more pleasant in that sense.
What do you do with the leads that you don't take? Have you ever thought about selling those leads?
What are you offering?
We'll talk after the show.
Great, yeah. I mean, we have, now 1,300 leads in our system that we've pretty much offered on every single one, and we were off. So if you guys want to take a look at, it'd be great for me to just filter what I have in Oregon and see if any of it could work for you, right? Because look, I can pay more if I already I just bought a park. It's 30 minutes from 76 units already own, and so I can pay more when I already have economies of scale there.
You have infrastructure,
right? So if you guys already have stuff here in this city, maybe I've passed on stuff that could actually work for you because you already have cheap management, you have good contractors, you have bank relationships, etc. So
the brain damage piece is done.
Right.
Yeah.
Right.
What's your holding pattern? You hold these things forever, or do you ever flip them or try to wholesale them or anything? When you actually do a deal?
I prefer to hold as long as possible and just keep raising capital for new projects and keep cash flowing new projects. Because again, my long-term goal when I started this was I want a bunch of passive income. And of course, none of this is passive. I learned the hard way. It's managed income.
That's a tax term, passive.
Right. Tax term for sure. This is hard work. But it is managed income. I will tell you, I spend only about an hour per week on managing each mobile home park that I own. That's only 7 hours a week. If I wanted to stop, I could live the rest of my life with a modest, managed income that I don't know. I would go crazy, right? I'm 34. I don't know what I would do.
Yeah, you couldn't do that.
I couldn't, but if I wanted to, I could live the rest of my life on the cash flow from these parks.
You're out of the rat race.
Yeah, exactly. I would say I'm financially free at this point because of that.
You're, as what 0 to 100 calls it R1, right? So now you're now free to do whatever you want.
Right.
Yeah.
Correct.
So we know that you're just going to want to go buy more real estate.
Of course, it's fun.
Deal junkie.
Fuck yeah.
Parks weren't
One more deal.
Sorry, I had to get that out.
Parks weren't super popular when you started buying. What year did you start buying them, you say?
My first one I bought in 2020.
Okay, so they were kind of getting popular.
Yeah.
But prior to that, they weren't very popular.
They got popular after Brandon Turner
Right.
and Open Door Capital.
They've become a lot more popular. Have you
Right.
seen the park owners know they're worth a lot more? Or what changes have you seen over the last 4 years you've been buying them?
Definitely, yeah. I think cap rate compression has been real, and some of the owners that we drop mail to, they go hey, that now these days they tell us, hey, I have 40 of these sitting, and before it was oh, thanks for the letter. I've never thought about selling. You're the first one that's asked me in the beginning, so it's definitely changed. It's shifted. Yeah, I mean, as you have more consolidation in the market, which happened in self-storage, a long time ago. That's kind of the cool thing about mobile home parks, I will say, compared to self-storage, is that self-storage is like 3 times as consolidated as mobile home parks. So there's still a lot of room for the little guy to get into a trailer park. But if you want to get into self-storage, I mean, like think about it this way. You've driven by that public storage, that big orange sign. You know that. There's brand recognition there. You've never driven by a mobile home park and be like, "Oh, I know that brand," right? You're just like, "Oh, it's a mobile home park."
And there's parks that values that are not on the radar of the big guys that are actual viable investments. Where in the the storage world, they could be not on the radar, but they're not viable income streams.
Yeah. Right.
So if you wanted to buy more parks and ramp up your buying, is it just a lead flow thing? Like how would you go about doing it?
Yeah, I think I need to spend on more on marketing for sure. Just more lead flow.
Is that mailers or calling or some different type of lead source?
Well, I would say we've had success with almost every type of marketing, but I lost my partner that was marketing oriented. So he did some text campaigns. He did a pay-per-click campaign, and we've gotten a deal from a ringless voicemail. And currently, I haven't been doing as much of those. So part of it is revamping, like pushing harder on some of those other levers that have resulted in success in the past that we're currently not doing. And then part of it's just ramping up what is working great, which is cold calling, because again, you have to know the demographic. It's older folks, mom and pop. They pick up the phone, right? You call in the morning, like they don't. Not all of them text. So we've gotten, of course, lucky with some of the other more advanced or pay-per-click. Hey, we owned a URL, sellmymobilehomeparks.com, right? So like someone found us through that, which is cool, and we got a great deal done. But yeah, that's how I would ramp it up: is go harder on the stuff that has worked before, and go harder on the stuff that is currently working. I mean, as simple as that.
Do you want to ramp it up and buy more?
I need to, because my goal is to buy 200 pads this year, and I've bought 21. So. But luckily, we have 357 that should be under contract here by tomorrow, so that's nice. Obviously, fingers crossed that deal pencils out and works out, because we would crush our goal.
Yeah. So with that part, because it's a perfect example to talk about, have you underwritten it already, or what info do you have on a deal like that prior to going out there?
We so far, like, to tie it up, we just do our quick analysis process, which allows us to make a quick decision, right? I have a quick underwriting model that takes 10, 15 minutes to understand the asset and see if we like the potential there. Now that we're about to have it under contract, it's kind of like, then we go dig deep into the financials, and if then those look good after the first week, then we fly out and then we check the physical stuff.
How often do these people have financials?
Oh, I mean, for bigger parks, almost always, yeah. Right. I mean, you can't run a 357 unit without help. And so they're just kind of forced to have a bookkeeper, have support, have a manager, etc. Now, when I buy the 21 unit I bought 2 months ago, it was smaller than I normally would buy. But again, it's right next to my other 2 parks. So it made sense. Same manager I can put on it. That one, he had just chicken scratch, which was weird because he was CPA.
He was a CPA?
Yeah, but just like it wasn't helpful. Luckily, it was seller finance, so it didn't matter.
Yeah,
but
we've had that before. They handed us a yellow sheet of paper, and he hand wrote all his utility bills on it for like 3 months, scattered about. He's like, "This is all you need." And, and then, dude, he told us, I was like, "My operating expense is like double what yours is." He's like, "If you choose to fix toilets, that's your choice."
You run it how you see fit, Trevor. That's crazy. So are you completely out of multifamily now? Did you sell off your first 20 units you had?
No, I still own all that.
But you're just not buying anymore.
Yeah.
He's a buy and hold investor, baby.
Yeah, I'm a buy and hold.
And he's parks.
I want to be like your colleague that still has that house from 50 years ago that he bought,
own all your parks forever and ever and ever.
We didn't talk about your daddies at all.
Yeah, so that's the parks business. I would say I spend, currently about 60% of my time there. And I do spend, I would say 20% on residential flips and dadus so that I can have income.
What's a dadu?
Dadu stands for detached accessory dwelling unit.
Oh, we call it an ADU here.
Yeah.
So in Washington, they call it a dadu.
Well, we call it an ADU if it's attached.
Attached is ADU.
Yes, if
Dadu
it's attached to the
detached.
primary
Oh,
structure.
That makes sense.
They have way better definitions.
That's way better than we
way
do.
better definitions.
Yeah.
Yeah.
And it sounds cool too.
It does.
Yeah, so if you have a finished basement or a finished attic or just a breezeway connecting like a primary structure to a secondary, then those are all ADU or AADU. And then if it's totally separate, but on the same parcel, then it's detached.
Do you condo those?
Condo lot subdivide, yep.
And
Yeah,
sell 'em.
you can condo lot subdivide anything, basically. You can in Seattle. So that's very convenient. If you want to condo a room, you can condo that. If you think there's a buyer for your bedroom, you can condo an attic or a basement or a parking spot. So that's cool.
This is like your model, Mike. You do this, right?
Yeah, you can literally condoize any space. It's just the operating agreement you create in the HOA docs.
So that's a hot new thing in Seattle is, again, another zoning change occurred, and they said, hey, now basically any single family lot can have up to 1,000 square foot detached accessory dwelling unit, which becomes just a single family home once you do that condo lot subdivision, and you can sell them separately. And so I've done a couple of those, doing a third one right now. Just got it right, this week.
But you've got to set up an HOA between the two.
Correct.
Because they're on the same tax lot.
Yep.
And lenders love them because they're detached. They finance just like single family homes.
Totally.
So that's the best, in my opinion, one of the best plays out there. You have some stigma you need to overcome with the fact that it's an HOA and it's a condo, and that is just education to the market. But there's data there, and the numbers are freaking insane, especially up there.
Oh, yeah.
And the craziest part about them, the Dadus in Seattle, is that there's pre-approved designs that have already been stamped by an engineer and an architect. So literally, you get a survey, the architect cites the Dadu, just places it at the back of the lot, and then you have a permit to build within a week after your survey is done. It's crazy because I've done new construction, and the fastest I've ever permitted a new single-family home build is 7 months, and the longest I've taken to permit, a multifamily build is 24 months almost. And so to have something in a week and just start building is amazing. We love that.
Yeah.
And you're using the same acquisition strategy for all your Dadus too. Can you speak on that?
I'm using a different acquisition strategy for my flip and Dadu plays, and I'll tell you what that is. I have defined my criteria for a flip and Dadu project. Okay, I need it to be under $1 million. We looked simply on Redfin on the market. I have a VA that spends 4 to 6 hours a week looking for the 10 best flip and Dadu plays she can find on market for me that meet my criteria, which is under $1 million, 1980 house or older. Lot size is 4,500 square feet or larger. It's not on an arterial road, and there's no massive trees on site, and there's no huge slope or other environmentally critical area. So I have those all written into a Google sheet, my criteria, and then using my criteria, she looks for the 10 best deals she can find, and then I spend 1 hour a week analyzing every one of her leads, and then my agent makes generally about 5 offers a week. Most of those are verbal offers because they're what the seller would call lowball, quote unquote. I would say it's a market price offer because they're overpriced. And so in general, we get one every 2 to 3 months like that. And I either wholesale it or I build it myself.
Yeah, no, I really like all the strategies and your use of VAs. How much success have you had from building these teams and these systems?
It's great. Yeah, I definitely depend on it. I mean, think about how long it takes you to find 10 great deals on market and put them all in a sheet and have them ready for underwriting that all meet your criteria. I mean, it just takes a while. And I value my time at $1,000 per hour, and so that's not $1,000 an hour task, right? The $1,000 an hour task is me looking at 10 of the best ones she could find and having my agent go, here's 5 offers. And then in that hour, I've created $1,000 of value for sure, right? Because if I just flip and if I built like the one I just got last week, this Friday, when I flip and build it, I'm going to make $220,000 profit on that deal. And we found it, because she put in the effort, and I just said offer. And one of those offers stuck, right? So, yeah.
Could you share what you were sharing with me yesterday about how you use your one VA to manage you? I love that.
Sure. Okay, so a few months ago, I was just feeling down, no motivation. But I noticed but I still was at least at a minimum showing up to all my team calls, right? I still have to work with the team, but I just was feeling down and kind of depressed. And, so I noticed I wasn't getting anything done throughout the day, could barely get out of bed. But then when I was on the team call and and I had to do something, like we were doing a working call, for example. Like sometimes we just do offers together, so my acquisitions guy can start to get a feel for like how I'm thinking about the figures and the numbers. And in front of them, while they were on the call watching me, I could bang through work like no problem. And so I realized, man, like maybe I just need someone watching my screen. So I hired, I found the cheapest VAs I could find, which are generally in Colombia for me, $3 to $4 an hour. And now I still continue to do it now. I have a VA just watch my screen for like 2 hours of the day that I'm most tired and least likely to do work, from like 1 to 3. I have a VA just hop on, watch my screen, and tell me if I start looking at my phone. I've instructed her to tell me, "Hey, Jan, what are you doing on your phone? Start working again."
This is amazing.
And then if I've been focusing for 20 minutes straight, I also instruct them to give me a compliment about how focused I am. Pretty weird, I know, but
I love
at $3 an hour, it's a very great value, because otherwise, like, you know, I've eaten lunch and I'm just like tired and I'm just not as productive. But when someone's watching me and telling me to do it, I just do it. You know?
No, I love all these efficiencies you're doing. He was using ChatGPT also over the weekend. He was tracking his macros, and he was just telling ChatGPT what he ate. And it was tracking all his macros, and it could start graphing it and doing all this shit for him. Like, I love all these little things that you're doing.
Wow. So you talk a lot about the different countries you've hired VAs in. Is there one spot you go to figure this out? Like how would somebody go look into hiring a VA? Is there like a website or a company that you recommend?
Yeah, I just get all my talent from Upwork.com. I have a simple like process doc I shared with Trevor. Maybe you can put it in the show notes, or if you hit me up on Facebook, I'll send it to you. Just a simple process doc of, here are the basics to creating your first requisition. How do you kind of filter through the many VAs that are going to waste your time? Give them a test task, so see how they perform, and then hire kind of the best one that has the best communication, best English, speed, efficiency on that test task. You don't want to find out 2 weeks into it that someone sucks. You want to find out before you even hire them that they're proficient or not. And so in terms of admin support, I recommend the Philippines. If you need technical support and programming, any kind of software work, I've liked Pakistan for that. Do not give them like cold calling jobs or admin jobs. They steal time, as at least they have from me, like multiple times, but they're amazing at software stuff. So it's just like, you got to know what people are good at and where they're going to just be lazy. Right. And then South America, I've done cold callers from Costa Rica and Egypt. I've been happy with both of those. So yeah, you kind of, as you hire a bunch of them, you'll start to see patterns, and those are the patterns.
You said Upwork?
Upwork.com.
Okay.
Yeah.
That's awesome.
Yeah.
I think we're going to wrap this episode up and come back and talk about deals.
Deals.
We're going to talk deals. Dive into some specific deals. You guys have anything for Jan?
That's fucking a lot, dude. Wow. That's amazing.
This has been really fun. Yeah. Thanks a lot, Jan, for being on the show today. We will come back and we'll do a follow-up, and we will talk some deals. And please share us, like us. And if you want to find Jan, go to WAREI. You can find a Facebook group page. You can join his mastermind, his education, the things that he offers, and learn more about how to go make your first million. We'll see you next time.